Everybody, Chris here, Better Investing. Let's do a little recap on the week for our SPY, and we'll go through QQQ. We'll look at Dow Jones, IWM, probably a few other stocks real fast. Main thing that we want to draw attention to in terms of like a longer term trend, we are still holding above the 10 and the 20 month SMA, right? The simply moving average, we're just holding above. Right now, this candle, is it too concerning? No, not really. We're still trading in this previous November's candle for the most part. We haven't taken out the lows. We had a little sell-off the day before with FOMC, which is the federal meeting regarding the decision rates, and a little hawkish in terms of the cuts, 25 points. And Jerome Powell came out, was a little hawkish and talked about some pauses and stuff going into the next year. So the market really didn't like that. You could kind of sense it with some of the market breadth readings that we had, but we'll talk about that a different day. I think the main thing we want to look at is we're looking at it from a weekly perspective, and we're still holding trend. And all we did was come back and tap the 10-day or the 10-week moving average, almost to 20. We're still holding this trend from these bottoms from last year, from 2023, and until that's broken, I think we still look long, but right now we do trade with a little bit more caution, right? Because we are below some of the shorter term moving averages off the daily. We are still hovering right around the 50-day moving average. So you can kind of see the trend line that I have. I kind of drew out for the most part, and what we really have is we got one tap, right? We got two taps. And the next question is, are we going to get third tap down here? Now, I know some people would say perhaps we're wedging up. I can take it from these highs. I don't see it, not on this. Perhaps if we look at QQQ is more of a wedge up, but for the most part we're just trending up. It's just an upward channel. Until we break this channel to the downside, right? We break this channel from this downside and start making lower highs and lower lows, then perhaps you can say, yes, the channel has changed, the trend has changed. But right now, that just isn't the case. Now, backing out a little bit, looking a little more deeper, or looking at even a smaller time frame. Well, this is the daily, right? So, looking at the daily, we can see the FOMC sell-off candle, right? And we can see what occurred prior to that, and that's what I'm saying you got to be mindful of, is because from December, right? Let's go 1 month, right? We look at it from a 1 month perspective. Perhaps right now at 1 month. Let's just go back, look at the daily. Let's go year to date. Maybe that'll give me a daily, right? Here's the month that we were looking at for December on SPY. It wasn't doing much. It was just trading sideways for the most part. And when you see there's just a range for the most part. When it decides to drop off, and people are going to look back and say, "Oh, that was distribution." And yeah, that was the case. We have some levels here that we can look at. We can say, well, once we broke below, pretty much, I would say around 603. All right, move this up to around 603. All right, 603 was the line in the sand. And once we kind of got below that, that's where all hell broke loose, and we came back and revisit this swing low from right here. So we definitely got to see what happened on a daily basis, right? Because yesterday we kind of opened, rejected the 50 several times, and then today we came into the 50, we broke above it, but then we closed right below the 50 again. And the reason why I mention that is because if we go to a smaller time frame, look at the 65-minute. The reason why you want to have a little bit of pause for concern, or have some pause, because the 10 and the 20 off the daily is sloping down now, and we do have that crossover right here. So what can happen is these can continue to curl down, right? And we just kind of just run into them, and then that leads to the next leg lower, and perhaps we finish filling this election gap. Right now we didn't fill it, but perhaps that's the case. But this chart definitely needs to repair itself, and I think it's probably best to kind of wait and see what happens. We do have like a little, I wouldn't say a little, but we do have um, a very short week next week with the holidays. I probably won't trade as much, considering how low volume would be. You probably see some things push around with the low volume, so perhaps you can catch some news like that. But in terms of like a daily chart, we gotta let this repair itself. So we go look at QQQ real fast. Again, I'm going to start from a higher time frame. Always want to start with the monthly, and then we kind of back out, right? So the main thing with the monthly, let me just take these off real fast. The main thing with the monthly is you do this off, and I don't want to show this either. So on the monthly chart, we are kind of putting in this inverted hammer candle on the monthly. Is it a pause for concern? Not yet. Kind of probably like see what happens in January. But you do see that type of candle, which occurred when at the top of the previous trend that we had. So back in 2021, we put in an inverted hammer candle right here at the top of 2021. Then we put in a doji, and then we broke those lows in February. And then we had that one leg down, two legs down, three legs down before we bottomed out in 2022. Right, we had a nice move up, pulled back into the 10-month moving average, and we continued this leg higher. So it's just something to be mindful of, going forward. Considering what this monthly candle looks like. Not saying that history repeats itself, but it does often rhyme. Let's see how much volume we have back here. This volume back here, this occurred in November actually. So no difference in a month in terms of like the candle formation so far. But from a weekly perspective, you're still bullish. All we did was come back and tap the 10 week moving average. First time we tapped that since since September. Since the beginning of November. But we're still above the 10 and the 20, and it's all sloping up. So we still have a defined trend, right, from these lows back in 2022. We can see it. That's a clear trend up. I could probably do something like this. Right, we're still trending up. Yeah, I could probably play around with this. That's the thing with like charting. It is like based on like one's perception. I can pull it from here. All right, we can do something like that. All right, I can get another touch right here for the most part if I want to. All right, that's your trend. Is that bad? No, it's trending upward. Right, like that's the case. All right, so that's what we got now. The big difference here, I would say, was that when we look at it again, like we've seen a big difference in terms of action from December compared to what was occurring on SPY. Right now, we were just kind of wedging up. Right now, and this is like what I'm saying, like you have to dissect the charts. Now we can say, from what's occurring here, right, we're just wedging up almost. It was like a wedge almost pattern that we was getting here. Right, we're just wedging up. And I could probably play around with this a little bit more. Like I could probably do something like this from these lows down here. Right. Now we're just wedging up. All right, so let's kind of do this. Let's remove all the drawings and let's just draw the wedge. All right, so here's your wedge. I can see some people saying, yeah, we're just wedging up. Yeah, right, we're just wedging up type of thing. And I'm probably not 100% in terms of my drawing, but I know people are saying we're wedging up, and what do we get? We got a wedge drop. Right, wedge drop between the 10 and the 20, which is, wouldn't say very concerning, but something to definitely think about. The thing here is that, the 10 and the 20 hasn't crossed over. We haven't hit the 50-day moving average. The election gap is still down here. So let's go ahead and mark off this election gap. We just got to wait, man. It's really that simple. And that's where a lot of the good traders and patient traders letting price happen, like letting price do what it's going to do, so we can kind of figure out, you know, what's going to occur. But we do have like a little gap here. It's not much. I mean, we probably feel it. I wouldn't even look for a bounce there. Just to be mindful, like that's probably an area you can look for. But same thing as before, that we mentioned is that, you know, we have to wait because on the 65 minute we have that same thought process, and you know, well, not really, but because we don't have the crossover yet. So perhaps this could continue higher. I mean, just think about it in terms of like, all right, we just put in the low, all right, put in the low. Now, what do we have next? Right, we got a higher low. So perhaps we start to build off of here, right? We break this previous, 65-minute high, right? We go higher, we come back down, right? Maybe we start to build out, and then we come back and take out these highs, for the Santa Claus rally or whatever. But I think, one thing I heard from people and good traders is no one's smarter than 10 and 20 day, and we're below the 10 and the 20. So you probably just want to be a little more cautious. You might want to reduce your size. You might want to not take as many trades or many setups that you used to take. Perhaps breakouts are not probably to play. Maybe you want to play more pullbacks. You definitely have to, tweak your style along the way as the market condition changes, and that's what helps you, navigate the market. One strategy is never going to always work. You have to tweak it. You have to refine it along the way with the market. It's almost like driving in the snow versus driving in the rain versus driving when it's summertime. All those things matter. Your driving style matters based on the conditions that are outside. So, yeah, I think this is something that we continue to wait and see. I don't know what this 519 spot is. I would love to know what that is. I don't know what that is. But yeah, I think that's pretty much all I got here. Just a quick check on IWM, and again, like we said, we seen that SPY was trending up. We seen that SPY was trading, trading in a range, and here's from December on IWM, we were just trending downward, right? I'm not gonna go into IWM, but let's go look at Dow Jones Industrial Average. Same thing from December, we were just trending downward. And that's where I was getting a little pause for concern once I realized this. And I was definitely late to it. That's my fault for not really making sure I pay attention to all the indices just to see where they're at, see what they're doing. I think I noticed it like the day before FOMC. I was like, man, this doesn't look good. And then let's go look at DJT, right? This is Dow Jones Transportation Average. Same thing. We're just trending down Jones. Came down here and tapped the 200-day moving average, and then here's your equal weighted RSP, which is the equal weighted SPY. So all stocks that are trading in this ETF have the same equal weight. Same thing. We're just trending downward. So that was a pause for concern. We've seen a lot of mixed results, right? We got QQQ trending up. We had SPY trading range bound, but we had Dow Jones Industrial, Dow Jones Transportation, and Russell Small Caps, 2000. All trending downward, and the market breadth wasn't looking fairly good either. So yeah, I think we gotta wait to see what happens, because we don't really have clear signal yet to get long again. Yeah, you can take some stabs at some things, but you just gotta be mindful. I do want to draw your attention to this Nvidia. So this Nvidia hasn't made a new high since November 21, while the market was making new highs. And is that a reason to be bearish? No, but it shows that it has some relative weakness compared to QQQ, right? That was making new highs, and this couldn't make a new high. So I think what we want to do is just wait and see what happens. I know some people are talking about, perhaps that this is, here's your right shoulder, right? Here's your head, pause. Here's your right shoulder. I'm sorry. Here's your left shoulder. Here's your head. Here's your your right shoulder. Looking at this like an inverse, not inverse, but a head and shoulders pattern. And if that's the case, we got that breakdown, and perhaps people thought, this pattern is gonna play out, and it squeezes higher. So some things I learned from traders. Some of the best breakouts come from failed breakdowns. So some people were looking at this as a head and shoulder and they got short. Right now, the way the market is moving, um, it could squeeze some people out, and you can see Nvidia go a little bit higher. But for me, again, it's below the 10 and the 20 day. We got the 50-day flattening out, look like it's ready to curl down. So like, if I wanted to look for a short here, we can, again, the way I like to play things, we can kind of see it kind of building out. It's not the cleanest, but we do have like somewhat of a trend line kind of forming here. But perhaps since we do have those moving averages crossing over, and let me do this since the market is closed. I can smooth these out. Let's go to wait to move that. All right, let's go ahead and smooth these out since the market is already closed. All right. So what we having is we see the no, the moving averages are already crossed over back here, and we put in lower highs since the same way. So what we can see occur, and if I wanted to try to take a stab at a short, then perhaps you want to see what happens up into this 20-day moving average as it it's curling down, or as this 50 starts to curl down. But what you would get is more of a flag pattern back into those areas where it looks something like this, right? We went up, we went down, we went up, we went down, we went up, right? Perhaps we go down a little bit more, and then we hit these levels, and then we get that continuation, or we do something like this, right? Maybe we don't reject at the 20, but we reject at the 50 that's above it, and then we get that continuation, and then everyone's gonna say, oh, it's a bear flag. That's what I see right now. From a smaller time frame, that's what I see. Now the problem is, let's back out, right? We always got to back out and look. Well, from the weekly perspective, all we did was come back and hold the 20-day moving average, right? We got below the 20 here back in August and we recovered. We got back below the 20 here in September and we recovered. And perhaps higher time frame, if we wanted to look at it, perhaps we're just flagging right now back into the 20. And perhaps this could lead us into the new year as still a strong stock. That's possible, right? But we probably need to take out these highs around 140, 142 for us to get that next leg higher. So it's something I'm keeping in mind. I think longer term trend still plays precedent. If you wanted to take a shorter term trend, then you just gotta play it on that time frame. The 65 and the daily. But if you're looking for a longer term move, we get back above 140, or perhaps if next week we start to push above these highs, right? We get back above the 10-week moving average, and we start to get that breakout. So that's about all I got for you guys. Now I'll look at some more stocks and post some more things perhaps over the weekend. But peace, God bless.